Welcome back, everyone, to the Biz Beat by SVA, where we bring business owners and leaders practical insights on taxes, policy, and financial strategy. I'm your host, Lee Schwartz, Director of Business Development and Sales here at SVA Certified Public Accountants, and joined again, as always, by Eric Trost, our tax principal, and of course, our firm's president. Eric, how you doing?
Pretty good, Lee, and actually really good now. I've got good news to share with you.
Oh, I can't wait. I love good news.
Yeah. I'm going to wait to share it with you until we get
Okay.
done.
All right. I thought you were ready to jump in and share with me, but I will save it for the rest of the podcast.
That's right.
Eric, we got a lot to talk about today. There's a lot happening in the business world, in the politics world that's affecting businesses. But just a reminder before we jump in, if you want to stay up to date on all the information we're putting out on the One Big Beautiful Bill Act, jump ahead to our website, sva.com/OBBBA, OBBBA. It's where we put all sorts of content, past webinars, new webinars coming up, biz tips, recordings of this podcast, all the fun stuff that you're going to want to know as you prepare for year end and how this bill is going to affect you. But Eric, let's jump in. I teased it. Big news in the politics world. It's not official, but why don't you bring our listeners up to speed on kind of what's happening with the shutdown and what you think the impact is going to be on business owners.
Right. So I'm driving to work this morning, Lee, and my drive takes me from the west to the east. So I drive into the sunset. Wait, that would be the sunrise. I drive into the sunrise.
Right.
So I'm driving in the sunrise, and it's a beautiful sunrise this morning. It's this orangey red hue lighting up the sky. And I knew at that time something good must have happened because, otherwise nature doesn't produce such spectacular sights. And sure enough, I get to work and open my news feeds, and the Senate has passed the spending bill, continuing resolution bill. So what this means is that the government, while still in shutdown, has taken a huge step forward to be out of shutdown. So where we were, and it's been frozen for about, I think, 45 days or so, where we were is that the continuing resolution bill, so the spending bill, in other words, I guess you'd kind of call it raising the credit card limit, has been stalled out in the Senate, and the Republicans and Democrats could not agree on it. And what the Senate needed to do is it needed 60 votes to pass this. So the Senate is a 100-member chamber, and normally you just need 51 votes to pass something. But through the filibuster rules, you actually need 60 votes to pass something. The Republicans have 53 senators. The Democrats have 47 senators. So to get to 60, some Democrats had to cross the line, probably angered some of their party to do that. But enough Democrats did cross the line, signed onto the bill. There was 60 votes that occurred. And so now this bill is going to move from the Senate back to the House, where the Republicans have a majority, a slim majority, and likely passes the House. Trump's indicated he'll sign. He likes to send his hints out, so I believe this is going to be signed by him. So I believe in the next day, this government shutdown is going to be over. And the government, once again, will fund all the things that it funds, from the benefits programs that are out there, to IRS agents, to making the tulips bloom. All the things that happen because of government is going to start happening again. And so if you're a believer in the government good and that the money it spreads around does something, you're a happy person right now. If you're a believer that the government is, maybe overburdened and a unnecessary part of your life, like Mr. Rand Paul, then maybe you're like kicking and screaming right now. But it looks like this is going to happen. The government's going to reopen, and it should be in the next day or so.
Okay. So, Eric, two things. Number one, I guess I'm curious, are you saying this sunset was a direct correlation to the Senate decision, or do you think because of the sunset, the Senate decided, you know what, everything's great, let's go ahead and reopen things? I guess I'm trying to understand what your mind is.
I think now remember, it's the sunrise. It's in the morning when I'm driving.
That's different. You're right.
Yeah. So it's the sunrise, and it's like a new day in America. So I think it is destiny. I think it was The all the stars aligning to say great things are happening now with this new sunrise and the government bill coming together. It can't be a coincidence.
No,
It has to
it
be
couldn't be.
that. No, this
It's
is
mathematically and scientifically impossible. All right, but Eric,
pretty much.
when it does reopen, let's talk about what that means for business owners. Like what you talked about IRS agents. Okay, that's
Mhm.
one thing. But what are some other things that you would expect to see? A change that are going to have an impact on business owners.
Yeah, and I'll start with IRS agents again, even though I said it before, is they aren't all bad, right? Sometimes they help you resolve your problems with the IRS. Right now, a lot of issues with the IRS, if you need some help, they're at a standstill because there weren't many workers there to help you get through some issues. So from our side, having IRS folks available to help resolve issues within our clients, filing tax returns, trying to get refunds, et cetera, resolve things. It helps to have a person on the other end of the line. It looks like there's going to be persons on the other end of the line again. Second thing is, the government does funding for programs that do funnel into businesses, whether it be grocery stores, talk about the SNAP benefits or those kind of things, whether it be other businesses that have a benefit of ultimately having their client base getting government benefits again. That's helpful for them. And I think you're also going to get more, the government does things like regulate the banking industry, does a small business administration. There's a number of programs out there where the government has a hand in. So for better or for worse, the government's in a large part of our lives. And this funding, turns all that back on. And there's a whole contingent of employees now that get to go back to work and collect paychecks as well. So this is going to be, I think, an overall positive for the business community. And wouldn't be surprised, maybe the market's built this in, but wouldn't be surprised if there's a bit of a market boost because of it, as well as, now that this presumably government shutdown is going to be over.
Great. All right. Thanks for bringing everybody up to speed on that. Eric, one of the things I know we want to cover today too is a topic we've talked about quite a bit, really, since we started the podcast and since we knew this legislation was happening. And it's, going back to the no tax on tips, no tax on overtime. We've discussed a lot about what those rules actually are, but there was some news just in the last week put out by the IRS. You want to bring our listeners up to speed on kind of some of the changes there, what they need to
Yeah,
know.
sure. So now, ironically, the IRS still has issued guidance even during this shutdown. So I think there's like one lonely guy in an office, an empty office building somewhere, still cranking out memos and things of that nature. And what this guy cranked out about a week ago was information on the no tax on tips and no tax on overtime. So recall, and from some of our previous podcasts, we were discussing the rules on what it means to have no tax on tips, no tax on overtime, and what an individual would see is, okay, I get up to a X dollar deduction, $25,000 deduction, let's say, if I'm married and I'm getting tips or I'm getting overtime. It's really the overtime premium I get to deduct from my taxes. So with that information, the average person's like, okay, well, what's that number? The average person's probably not keeping track of what all their tips are or what their overtime premium is. So how do they get that information? And normally, information that you need as an individual to file your tax return, it comes from other sources. It comes from banks sending you 1099s. It comes from your real estate tax bill. It comes from your W-2 from your employer. In this case, this tips and overtime reporting is expected to come on a W-2 from your employer as other information. Now, normally what happens is there's a reporting process and you have an easy box and here's the number where it is. Well, in 2025, that's not going to be the case. The W-2 in 25 is going to look a lot like the W-2 in 24. In 24, there was no box for no tax on tips or no tax on overtime because those rules did not exist. So there's no separate box, no easy place to put it. And so the IRS said earlier in the year, hey, you've got to put it onto the W-2 and you put it in this format in this box and give the individual numbers for this. And by the way, if you don't do this, you're going to get a penalty or a fine. So what the IRS has done is pulled back on what the requirements are. They still are going to have employers do this, but they've said, hey, we're not going to fine you if you get it wrong or punish you if you get it wrong. So you have to have a reasonable method to come up with this. And here's some ways to lay that out. But they've eased back on what the penalties and fines are going to be, just in case the employer doesn't have a great tracking mechanism. They can still do some kind of approximate or approach here that gives the employee a number they can use when they file their tax return. So this is probably 2025 only. Next year, there's probably going to be more rigorous rules in place on how these tips and overtime are reported. But for 2025, it looks like, I don't want to say it's a free for all, but the employer has a little more option and approach here to get numbers down, especially when, recall, this rule was signed July 4th. No tax on tips, no tax on overtime. This rule applies for all of 2025. So if you weren't tracking it prior to July 4th, and maybe you weren't, how do you figure it out prior to then? Because nobody tracked it. Well, these are the rules that allow for a little more guesswork and approach on it with a rational approach, and also then ease back any penalties or what could otherwise be fines for not reporting it correctly. You're given leeway as to how you can report this.
Right. And I'm sure that's going to take a lot of anxiety away from these organizations that pay their employees through tips, or that earn money through tips or overtime. Like, a lot of this was not worked out by employers and payroll providers, right?
Not yet. And, I'm sure the large companies are getting things in place to have this ready. But not every company uses one of the large payroll providers to do this. Some of them do their payroll in house. So what are they supposed to do? So, this rule does open up, and as you're right, I think anxiety, it lessens the anxiety you have about reporting this, knowing that, okay, if I'm wrong a little bit, that's okay. I've got the reasonable approach down, and here's how I figure the number out. This is something you'll probably want to talk to your accountant about, though, as far as how you're going to get this reporting on here. You still have to make this good faith attempt to get it right. And so you do want to talk to your accountant about your approach and how you can best do this to get what you believe is a reasonable way to get an accurate measure to the employee.
Great. Awesome. Thank you for that update. I know, like I said, we hear this from clients, and there still have been a lot of questions about this. How is this going to be reported? So I do think this is going to be a little bit of a relief to a lot of people out there. Well, Eric, let's talk mailbag. So just a reminder, you can send us your questions. Send it to us at bizbeat@sva.com, or drop them on our website at sva.com/bizbeat. So, Eric, this question that we got this week was, I'm a small company. They don't say how small, but I'm a small company. How can I go back and take advantage of the R&D credit? So maybe a little bit of background, and then jump into that answer if you can.
Yeah, and I kind of know where this question's coming from, because you're starting to see more advertising from firms, especially the ones that do the R&D credit studies and kind of made their bread and butter on this, starting to get out there more and say, hey, don't forget to take the R&D credits, and maybe you can go back and take them. And with the new legislation, you get to fully expense the R&D. So what happened in 2022 through 2024 is that R&D expenses, which used to always be 100% deductible, were now deductible over a period of time, which means that spending $1 on wages means in the first year you got about an 80-cent deduction, and so on and so forth for 5 years, 20 cents a year about. What that meant was you essentially had more reported income than you might have had dollars in your pocket. And for small businesses, those that are under $31 million in gross sales, those are small businesses according to this legislation, they're allowed to go back now from 22 to 24, 22 through 24, so 22, 23, and 24, and update their returns to show that they get 100% deduction for those R&D expenses again. So while the rules were in place from 22 to 24, they had to do this add back and a small piece of subtraction. Now they can go back and say, wait a minute, with the rule change through OBBBA, I'm now allowed to take 100% of those deductions again. You take all those deductions, you can file an amended return to do that, and then file your individual return, refile that again, and try to get refunds from that. When I say try, I mean, this is not a gray area. This is pretty black and white. These are the rules as they exist. So you can apply for a refund, and you can do it starting now. And actually, in October, they released some more rules on this, but you can do it starting right now so that you can get your claim into the IRS for a refund for those research and development expenses that you had in 22 through 24 that you didn't fully deduct. Now, for everybody starting in 25, everybody, small businesses, large businesses, whatever, you can deduct 100% of your research and development expenses again. So for 2025, it's all back on the table. But for small businesses, you can go back 22, 23, 24, refile your returns, take more deductions, and potentially get some refunds back. So I think that's what the question they're asking is. Now it's time to see your tax accountant and say, hey, we had these add backs back in 22 through 24 in R&D. Can I take advantage of those deductions now and go back and refile returns and get some money in my pocket, with the claims starting right now?
Yeah. And these can be, I mean, I know I always find it interesting when you hear somebody else's version of what a small business is, but 31 million and below, these can be some pretty big numbers.
Yes.
Yeah. So if you're under that number, and again, I think we've talked about this on the podcast before, Eric, but it's not all white lab coats and Bunsen burners is what R&D is. There's a lot that qualifies for this.
Yeah. I don't think anyone uses Bunsen burners anymore, but
It's all beakers and Bunsen burners, pipettes, things like that.
Sure, right.
That is all I remember from my chemistry class of 30 years ago. Anyway,
Yeah.
Well, all right, that's great. So definitely something to be thinking about, and I think just yet another thing to be thinking about at this time of year as we're getting late and close to tax planning season, or I guess in tax planning season. So that wraps up this week's episode of the Biz Beat by SVA. Don't forget to subscribe on Apple Podcasts, Spotify, or on YouTube, and check out sva.com/OBBBA for updates and resources on the One Big Beautiful Bill Act. And just a reminder, as always, the information we share here is intended to be general in nature. It's not supposed to be specific advice for you and your business, but that is what we do, and we like to think we're pretty darn good at it, and now's the time to do it. So if you don't have a great advisor working with you on year-end tax planning, please reach out to us, and we can talk about how to make you a client. Thanks again for listening, and we look forward to seeing you next week on the Biz Beat by SVA.
Day. From tax tips to business trends, smart insights from trusted friends. The Biz Beat by SVA.